For now, we'll keep coming back to you and, of course, talk about more stocks. For now, the start is clearly on the weaker side. But I was at MP's Mutual Fund Summit yesterday and had the opportunity to catch up with 5 of India's best CIOs. Together, they run 3 lakh crores in the market. And the opinion was unanimous. Domestic participation in the market is only headed higher. And as investor education penetrates the Tier 2 and Tier 3 cities, the retail crowd will be joining soon.
Yeah, I think over the long periods, we have a very long way to go, and what we are seeing now is the result of the effort of lots of people, mutual funds, AMFI, regulators, banks, IFAs, lots of education has gone in. I think the understanding about equities, the long-term potential is good. We still have a long way to go. And if you look at where we are today, mutual funds own about 4% of the market capitalization. Globally, this number is between 20 to 40%. And if you look at on a flow basis, the industry is collecting about $20–25 billion a year, which is about 1% of India's GDP or about 4% of household savings. So I think these are reasonable numbers, but I don't think these are not sustainable. And I think over the next 3–5 years, these numbers should actually grow higher. And one final point on this, if the flows sustain for some more time, if the volatility in the markets can come down over time. Indian markets have historically been more volatile because the local flows were weak compared to the FII flows, and which at times were driven by developments outside India. So if local flows which are more steady become as strong or stronger than foreign flows, the historically higher volatility that has been associated with equities could actually moderate, and which to my mind could further encourage flows into equities as an asset class.
And I take Prashant's point that mutual funds own only just about 4.5–5% of overall market cap. But is there enough headroom right now? Because so much of our float is already with FIIs, so much with, of course, insurance companies as well. Do we need to now come out with different products? For example, a stock like HDFC or, a large stock like Infosys and all. Is there enough float now for mutual funds to buy into? Or do we need some more structured products for mutual fund to have slightly higher stake in India's equity markets?
One is very often we think mutual funds is only equity, but there is equity and debt of different types. So the scope for the mutual fund industry is much more than equity alone. The way we look at it is over the next 5 to 10 years, there'll be a lot of requirement of growth capital, a lot of requirement of equity issuance. And over a period of time, I believe that in most of the countries which have developed, promoter shareholdings have also come down because you have actually growth requirement, which cannot be only funded by promoters. So if that kind of a situation were to happen, I think there will be continuous fundraising, and that fundraising will broaden the market pretty significantly.
Anup, your thoughts on this? What needs to be done to have the penetration in the rural market, in the hinterland of India, for people to be investing in markets, in mutual funds?
So we've taken the route which is the most profitable, and that is to focus on states and towns where you get easy access to money. And as the industry becomes bigger and more profitable, and which the two gentlemen out here represent, which is the case of HDFC and ICICI, it's going to be their focus to go into the Tier 3, Tier 4 towns and to do that. But for a smaller player, it still makes sense only to be in the top 20 cities and try to exploit there's a potential.
Okay, fair point. Vetri, the other issue is that so far it's been good that we've had so much retail money pouring in via the mutual fund route. But we haven't seen that being tested. We haven't had a huge correction in the market. For example, we all remember post 2008 there was quite a bit of withdrawal of money by mutual fund investors. Do you think the Indian investors have now become mature enough to not withdraw at the first sign of panic and in fact add more at lower levels, which really is the way money is made in equity markets?
And if you look at the rise of what we've seen in terms of inflows through the SIP route, and that's been, I would say, a phenomenon which has been more visible only over the last, 4 years or 5 years, then, even during this period, we've had 15, 16, the market was down about 25% over a year. Again, if you look at late 16, it was down maybe, 13, 14%. So it's not that it's been devoid of corrections, but I think certainly, and the bigger point over there is we will have to educate as an industry, our investors as well, in terms of accepting the fact that if you are in this journey in terms of investing in equity through SIPs, hopefully you're looking at it over a very long term, 15 years, 20 years, perhaps even longer. And during that period, there are bound to be environments and times which are going to be difficult for you. But that is part of the journey, and the merit really is in staying the course.
How do you convince an investor to, go via mutual funds and not directly via, say, the ETF route?
I think ETFs in mid-cap space, I think, are going to be a non-starter in that sense, given the fact that, mid-cap investing is all about, patience, collecting stock over a long period of time, because the liquidity is pretty low in several mid and small caps, which will generate a lot of alpha. So if one were to just try and replicate a mid-cap index, I think that's the most disastrous thing to do. I think it's just that one has to have discipline in investing into mid-cap funds and keep being invested for a long period of time to generate wealth.
Okay, the ever optimistic fund managers